What's up, everybody? This is Sungpo, the Korean bro. Today is 2022, August 21st. How are you guys? Today is Sunday night here in South Korea, and let's look at stock market news. Okay. The website that I'm going to look at is marketbeat.com, and let's see. China plans cloud seeding to protect grain crop amid drought. Strike a big shipping port adds to UK industrial chaos. Russia's war 6 months, a global economy in growing danger. Two EV suppliers power into gains after raising views. Which semiconductor stocks are ready for big price moves? Okay, let's read out this first. China plans cloud seeding to protect grain crop amid drought. So they are having serious drought. I get it. Okay, China says it will try to protect its grain harvest from record-setting drought by using chemicals to generate rain, while factories in the southwest waited Sunday to see whether they would be shut down for another week due to shortages of water to generate hydropower. It will try to protect its grain harvest from record-setting drought by using chemicals to generate rain, while factories in the southwest waited Sunday to see whether they would be shut down for another week due to shortages of water to generate hydropower. The hottest dry summer since Chinese records began 61 years ago has wilted crops and left reservoirs at half of their normal water level. So they are having serious drought, right? Okay, factories in the Xinjiang province were shut down last week to save power for homes as air conditioning demand surged, with temperatures as high as 45 degrees Celsius. The coming 10 days is a key period of damage resistance for southern China's rice crop, said Agriculture Minister Tang Rinzhen, according to the newspaper Global Times. Authorities will take emergency steps to ensure the autumn grain harvest, which is 75% of China's annual total, Tang said Friday, according to the report. Authorities will try to increase rain by seeding clouds with chemicals and spray crops with a water retaining agent to limit evaporation. Tang's ministry said on its website it gave no details of where that would be done. Okay, severe drought that they go through can possibly affect global economy as a whole because they could possibly have supplier issue, right? If they have no choice but to limit their supply, it can possibly affect the supply, like on demand supply, so Australia-based shipping port as UK industrial chaos. The first day of a planned strike at Britain's biggest container port started Sunday, joining a serious series of walkouts by transportation workers that have disrupted economic activity across the country. Almost 2,000 workers at the port of Felixstowe, located about 150 kilometers northeast of London, walked out the jobs over pay, raising fears of severe supply chain problems. The port handles around 4 million containers a year from 2,000 ships, almost half of the country's incoming shipping freight. Sharon Graham, General Secretary of United, the labor union that called for a strike, alleged the company that operates the enormously profitable dock and its parent company, CK Hutchinson Holding Ltd, prioritized shareholder profits over worker welfare. They can give Felixstowe workers a decent pay raise. It's clear both companies have prioritized delivering multi-million pound profits and dividends rather than paying their workers a decent wage, she said. So I don't think it's that important. I mean, of course it's important, but planned strike. Planned strike happens everywhere. Even in Korea, we have a planned strike. Probably this is written as an article because it's planned strike is not just like small size strike. It's a huge strike, so it's written as an article, I guess. Russia's war 6 months, a global economy in growing danger. Martin Quoth needs natural gas to run his family's company. Zinc Power, which Rush proved still competent in Western Germany. Zinc Power's facility outside Bonn uses gas to keep 600 tons of zinc worth 2.5 million euros in a molten state every day. The metal will harden otherwise, racking the tank where still parts are dipped before they end up in car suspensions, building solar panels, and wind turbines. 6 months after Russia invaded Ukraine, the consequences are posing a devastating threat to the global economy, including companies like Zinc Power, which employs 2,800 people. Gas is not only much more costly, it might not be available at all if Russia completely cuts off supplies to Europe to avenge Western sanctions. Or if utilities can't store enough for winter, Germany may have to impose gas rationing. They could cripple industries from steelmaking to pharmaceuticals to commercial laundries. If they say we're cutting you off, all my equipment will be destroyed, said Koff, who also chairs Germany's Association of Zinc Galvanizing Firms. So it's pretty much simple. The point is, since the beginning of conflict between Russia and Ukraine, things has changed a lot, and also it has affected the global economy as a whole. And a lot of small, medium-sized company have a hard time, coping with it. Uh, they don't have much energy that they need for running their business. Like they're like running, but they are running their business only you know only minimum amount of energy they can get from Russia, right? So it's a serious problem. Okay, next one we have is the EV suppliers. Two EV suppliers powering to gains after raising views. With sales of electric vehicles expected to rise in the coming years, EV suppliers such as Lumino Technologies and Wolfspeed saw large post-earnings bounces recently. With sales of a vehicle expected to rise in the coming years, Lumino Technologies, LAZR, and Wolfspeed Wolf. Okay, so large post-earnings bounces recently. A February study from S&P Global Platts Analytics found that global light-duty electric vehicle sales reached a record high of 6.3 million units in 2021, up 102% year on year, with this number expected to rise to 26.8 million units in 2030. The updated 2030s forecast is 23% higher than an earlier forecast published in June 2021. Platts Analytics low carbon transport analyst David Capity said in a statement that the forecast was upped due to several factors, including faster than expected consumer adoption, increased policy support, and pressure from governments. While the industry is poised for growth over the medium to long term, companies that supply the industry can also show significant gains. The industry is poised for growth over the medium to long term. The companies that supply that industry can also show significant gains. More deals with EV makers. Luminar, which makes sensors for autonomous vehicles with the aim of increasing safety, last year said its lidar sensors would be incorporated into EVs manufactured by Sight Motor, China's largest automaker. Luminar also has deals with Volvo, Daimler Trucker AG, and Intel's Mobileye, among others. On August 8, Luminar reported a second quarter loss of 0.18%. $0.18 per share and revenue of $9.9 million. Revenue was ahead of company expectations and marked a 57% year over year gain and a gain of 45% sequentially. As well, Luminar Wolfspeed is a market leader in silicon carbide and gallium nitride technologies. Its product lines include silicon carbide and GaN materials, power devices, and radio frequency devices for various applications, including electric vehicles, fast charging, 5G, renewable energy and storage, as well as aerospace and defense. Okay, that's enough. Okay, next article. It's one that we read last time, right? So, it's one that we covered. NVIDIA advanced micro devices on semiconductor. Okay. Let's go to Yahoo Finance. Okay. APM systems. Okay, among the list of companies that I invested in, I say that the one that I got the most is EPAM systems. My gain is 103% so far, and I'd have to analyze at this point because I told myself, I was thinking to myself that as it gets up to 100% and 200% and 300%, that's the point where I have to inspect, uh like that's the point where I decide whether I should keep it or sell it. You know, so since I already have a 1 or 3% gain, I'd have to look at the articles and analyze some of the points, and I'll decide, okay, whether I should keep it or not. Um, and here is an interesting article about EPAM systems. Let's see. This top computer and technology stock is a number one. Why it should be on your radar. Building a successful investment portfolio takes skill and hard work, no matter if you're a growth, value, income, or momentum focused investor. EPAM was upgraded to the Zacks rank number one list in August 9, 2022. The Zacks rank is a unique stock rating model that helps you take advantage of earnings estimate, revision trends, and provides a way to get into stocks highly sought after by institutional investors. Headquartered in Newton, PA, EPAM Systems is well known for its software engineering and IT consulting services. 7 analysts revised their earnings estimate higher in the last 6 days of fiscal 2022, while the Zacks consensus estimate has increased the bottom line. What's bottom line? With a number one strong buy ranking, positive trend, earnings estimate revisions, and strong market momentum, EPAM could be just a stock to help your portfolio generate return that could fund your retirement, your kids' college tuition, or your short and long-term savings goals. Is that it? Okay. First target estimate 510. Its revenue is increasing. Its earnings is increasing as well. Hmm. 61,300 people are working. Its gross profit is increasing too. My decision is keep it. Well, it was that simple. Okay, let's read other articles. Okay, energy stock, is there more upside? Experts weigh in. Workers can execute the work from home, hybrid work. Foresee splitting off EV unit needed to happen. With bear market scores, these 37 stocks expect 111% to 762% growth. 2 buy rated dividend stocks yielding at least 7%. Be like Warren Buffett and buy T-bills. Nvidia stock, Dow Jones futures, what to do as market rally pulls back. Assume you are laid off. Zeus Ormans likes these 3 simple techniques to prepare for a recession ahead. Billionaire George Soros pours money to these 2 strong buy stocks. Will fertilizer stocks weather the storm? This financial matrix could move Palo Alto also stock when earnings come in. fast-acting depression drug wins FDA approval. Hmm. The stock market couldn't handle the uncertainty. It better learn how. Tax rally is too good to be true. Why the Nasdaq looks due for another fall. Bill Gates is a collapsed largest shareholder. He just scooped up more shares. A collapse. Bitcoin and stocks are falling together when what's sublime. Dream reinstates the dividend but Ford's yield higher. The three kings of high dividend yield. These are the signs that the bear market rallying stocks won't last long. Here are three proven ways to get really rich during a recession without having to risk a bunch of money to do it. Shopify CEO Toby Lu bought up Coinbase stock. Okay, let's read articles, okay? What do we have? Energy stock. Is there room for more upside? Experts weigh in. It's been strong 2022 for energy stocks. The S&P's 500 at least up more than 40% since the beginning of January, before outperforming the broad market. Okay. In June and July, overbought energy stocks pulled back sharply amid concerns of recession and tumbling oil prices. Since then, the sector has regained a large portion of those losses. In continuation of our series, What to Do in a Bear Market, Yahoo Finance asked the experts if energy is still the place to be given the recent pullback in oil prices. Energy stocks were the places to hide out for most of the first half of the year. Should investors still be holding on to energy stocks? We still think we're in the early stages of a longer term period where crude oil and natural gas prices remain fairly high by historical standards. In practical terms, this means crude oil likely in range of $80 to $100, of course, billion. And at those price points, many energy firms should have strong earnings power and throw off a lot of free cash flow. The volatility that comes with the space. The biggest risk to energy names is a recession that hurts demand and causes price to decline even further. For a short amount of time, recessions do not last forever, he added. Energy companies' top and bottom lines surged last quarter. Their strong quarterly points are expected to continue into the rest of the year. The strongest sales and the earnings announcements will be in the energy sector for quarter three and quarter four due to favorable year-over-year comparisons. Hybrid work. Employees can execute the work from home, JL CEO says. Meaning working partially in person, partially in the office is catching on with more companies since the onset of the coronavirus pandemic. According to new data from commercial real estate company Joe, 77% of company leaders either agree or strongly agree that offering remote hybrid work is critical to attracting and retaining talent. Additionally, 53% of those surveyed said remote working will be made permanently available to all employees by 2025. What people realized during the pandemic is that they can execute the work from home as well. JLO Global President CEO Christian Albrecht told Yahoo Finance Live, just do your work. That's not a reason to come back into the office. It's about collaboration, it's about innovation. And so you have to create an environment which is more attractive in the office than to work from somewhere else, right? To entice employees to return to the office, even for just a few days a week, some companies have resorted to perks like offering free food, more paid time off, and even monetary incentives. That would include those options, health and well-being features, which would include great food, snacks, and those types of things. Daycare for your children, Albridge said. It's complicated, obviously, but people are trying, depending upon which location they're in. So we will see all types of features, which will just be a pull for people to get into the office. Hmm. So the author here is stating that it's possible, working both inside the office, working both inside the office and outside the office. And that's one way of enticing talented person. It's for a business to grow, enticing talented person is important, right? So for CEO, splitting off EV unit needed to happen to transition faster. At this year's Monterey Car Week, Lincoln is celebrating a big milestone in style. The brand now in its 100th year will be a feature that Marco at Sunday's Pebble Beach Concourse Elegance and will show off its Model L100 electric concept vehicle. The electric vehicle concept is a massive vehicle with a completely configurable, luxurious interior that reimagines what it will be like to be transported in an autonomous feature. The biggest change in our industry isn't really electrification, it's more about autonomy coming together with a software upgradable vehicle. Going to digital powertrain is great, but the real change in our industry is going to be using your internal differently than you think, at least on the high end. Hmm. For the internal, at least, it's something Farley calls a digitally enabled experience, which can be changed ad infinitum via software updates. Lincoln's transformation, which will see the brand go all electric, introduce four new EV models by 2026, is mirroring the changes happening at Ford, where Farley has split up the business into two operating units in order to drive its EV transformation. Okay, it's like a software thing. Like he's talking about module. Uh, I was watching the company literally struggle. I saw a transmission engineer trying to learn about batteries. I was just going to take too much time. We didn't have time. We're way behind for all he says about need to change the way Ford was doing business. So to catch up and pass, we need to specialize. I have no idea how we would make this transition if we didn't specialize. The importance of specialization. Uh, so, for example, if I'm a car vehicle maker, I would only focus on uh, I would only focus on hmm, I would only focus on how we make vehicle, the plan of making vehicle, and I'd have a design company design. Uh, my vehicle, and I'd have engine company to produce engine, stuff like that. Importance of module. With bear market scores, these 37 stocks expert expect 111% to 760% growth. So what are they? This year's bear market has mauled many companies, particularly once high-flying tech and growth stocks like Nvidia and Meta Platforms. The resulting sector rotation has put energy stocks and chemicals in the spotlight. The stock screen highlights 37 companies expecting at least 100% earnings growth in 2022 over their current fiscal year. All stocks and others from the energy sector dominate the list. Very top list with analysts forecasting 762% EPS growth for the full year. Bright, all stocks and other energy sector. HF Sinclair, CVDAS Resources, Antrim Resources. It all has to do with energy companies, okay? Daco New Energy. Be like Warren Buffett and buy T-bills. Okay, let's look at Salesforce.com. CRM. It's got enough space so that it can possibly go upward. Billionaire George Soros pours money to these two strong buy stocks. In the word of stock legend, George Soros stands out. While his political activities have been a lightning rod for controversy, no one can doubt his financial acumen. After all, he's the man who broke the Bank of England and made $1 billion in one day when he shorted the pound sterling back in 1992. Soros eventually commented, "We use options and more exotic derivatives sparingly. We try to catch new trends early and in later stages we try to catch trends reversals. Therefore, we tend to stabilize rather than destabilize the market. We're not doing this as a public service, is our style of making money." So when Soros make a move, it is only natural for investors to sit up and take notice. With this in mind, we decided to take a look at two stocks his fund has recently loaded up on. Soros is not the only one showing confidence in these names, according to the T-Branch database. Okay, let's look. Salesforce. For next stock will turn into the tech and marketing world, where Salesforce has long been an industrial leader. The company gets its ticker CRM from its main product, a customer relationship management software packages. These are offered as cloud-based solutions through the popular SaaS subscription format. Salesforce enterprise clientele use the products to manage and solve front-end marketing issues. Later this month, Salesforce will release its quarter-second results for fiscal year 2023, but we can look back at the company's fiscal first quarter. and its recent trends to get an idea of where it stands now. In its fiscal first quarter 2023, Salesforce reported a $7 billion at top line, a 24% gain from the prior year's quarter first, and the highest revenue result in the past 2 years. The company also saw a strong year-over-year gain of 14% in operating cash flow for the quarter. On a negative note, the company's reported non-GAAP diluted EPS came in at 98 cents per share. So, okay, I get that billionaire George Soros put a lot of money into it, a lot of money into Salesforce, and this author likewise thinks the same way. But it's strongly recommended that we, as an individual investor, have to look at it carefully in terms of investing, right? So Salesforce. Once I get money on 25th of August, I'll have to think about investing into it. Okay. Okay, let's read this one too. Bill Gates is Ecolab's largest shareholder. He just scooped up more shares. Ecolab. What is Ecolab? Bought more shares of the provider of water treatment, hygiene, and infection prevention goods and services. Ecolab stock has slumped about 27% so far this year. In late July, the company's second quarter report beat expectations, but Ecolab said the period was hurt by cost inflation, investment in this business, and unfavorable currency translation in a rapidly changing global operating environment. Let's look at it in detail. They we all know that Bill Gates is interested in hygiene and water providing system, stuff like that. So I think that's the reason why he invested a lot of he bought a lot of shares of this company. Ecolab provides water hygiene and infection prevention solutions and services in the United States and internationally. The company operates through global industrial, institution specialty, and global healthcare and life science segments. The global industrial segment offers water treatment and process applications and cleaning and sanitizing solutions to manufacturing, food and beverage processing, transportation, blah, blah, blah. So many things, right? Okay, I get that. Let's read this. It seems like an interesting article. Every investor, okay, here it is. Certain politicians have dismissed the idea that the US is currently in a recession. But if you look up the textbook definition, it seems like we can't avoid using the R word anymore. Recessions are prolonged downturns in economic activity, usually associated with falling retail sales, lower industrial production, declining wages, and higher unemployment. Downturns also provide plenty of opportunities for regular people to build wealth. Stocks, real estate, and starting your own business. Oh, here it says stock. Okay. Every investor wants to buy low and sell high. Stock market downturns during a recession might be an opportune time for bargain hunters. While the GDP contraction quarter first and quarter second wasn't too severe, stocks have already fallen by a lot. The S&P 500 is down about 20% in the first 6 months of 2022, marking its worst first half performance since 1970. Investors who want to scoop up shares on the cheap might want to be cautious and focus on companies that can thrive during a recession. Okay. Every method listed here are all the things that I know. It's not new things. So I don't want to just skip it and go on to the next one. Those are the signs that the bear market rally and stock won't last long, according to Citigroup. Tech rallies too good to be true, while it also looks due for another fall. For years, tech investors seem to outrun every bit of trouble, like the Roadrunner and the old Looney Tunes cartoon, but this summer tech buyers have changed roles. Suddenly they look more like Wild E. Coyote. The Roadrunner's flail-tailed pursuer Willie would always make headways running off a cliff through the air, but after a certain point he would look down and realize his poor predicament. Gravity would take hold, and while Willie would suffer a painful fall. Hmm. Hmm. Not a single interesting article can be seen at this point. Hmm. Cloudflare. Why Cloudflare could thrive in a recession. Let's read this out for let's read this aloud. And okay, it's going to be my last article. Okay, let's go. Making the cloud cheaper is a compelling value proposition in times of economic uncertainty. No business is fully immune to recession as cautious spending cuts ripple through the economy. As economic confidence wanes, even the strongest companies can get hit by weak demand. Some companies will do better than others. Any company that can save its customers money, whether those customers are consumers, small businesses, or large enterprises, has the potential to grow stronger throughout a recession. There are no guarantees, but Cloudflare looks like a good cloud stock to bet as the economy uncertainty grows. Cloud bills matter again. Winning in the enterprise. Running your infrastructure on a cloud computing platform like Amazon Web Services is not cheap. If you're a startup with access to easy funding and focus solely on growing as fast as you can, on exploiting cloud bill isn't a problem. Dedicating resources to keeping cloud costs in check means diverting resources away from growth. When funding gets harder to come by and when profitability starts mattering again, cloud computing bills become any easy targets. Spending on AWS can quickly get out of hand if you don't care about optimization, and bandwidth can become particularly problematic. If you are transferring data that doesn't really need to be transferred because it was easier than spending time on optimization, your bill will reflect taking the shortcut. The easy way out of this situation is to seek Cloudflare's platforms in front of resources running on AWS. On top of likely speeding up access to those resources and adding a layer of protection against attacks. Cloudflare can dramatically reduce cloud computing bills. Every piece of data that's cached on Cloudflare and delivered from its global network is a piece of data that one rack up bandwidth charged in AWS. Even if they start out using Cloudflare's free service, it opens the door for the company to make use of the rest of Cloudflare's platform. Cloudflare offers advanced security feature in image optimization and a slew of other products that can easily be tacked on. Cloudflare Workers is another potential money saver. Workers allow customers to run chunks of code directly on Cloudflare's edge network. Depending on the use cases, workers can be a lot less expensive than that running virtual servers, or serverless functions. Oh yeah, 머선일이고. 아이고. I was talking about the company named Cloudflare. Cloudflare is the company that produces cloud service. Uh, as a company itself, it's hard to. Oh, uh, about that lecture, uh, my mentor, my teacher, is absent today because he officially said this morning that he's going to attend hackathon 대회. I'm not sure if it's going to be held today or tomorrow. I don't know exactly when, but he says because of that, he wants to skip it tonight, but it will be postponed and he will do it next to Sunday. So I got much more time. So instead of looking at lecture, I'm doing YouTube live. But I'm almost done, though. Yes. Yes. Anyway, yeah. Let's sum it up, okay? Cloudflare. The one last reason why investors should invest into the company named Cloudflare is because Cloudflare offers free service to anyone. But it makes around 60% of its revenue from large customers spending at least $100,000 annually. Uh, that's good news because these large customers are much less likely to go through the pains of switching providers. So Cloudflare is seeing elevated churn among its pay-as-you-go customers, and that will likely continue as long as economic uncertainty remains. But it hasn't been a big enough problem to really hurt Cloudflare's growth rate. Well, since it went all the way up to uh, what was the highest it got? I forgot. Anyway, now what is it? A Cloudflare uh, is not having a hard time. It's having really good time, and they're having a profit year over year. And its main client is a company, big companies. So it's good because big companies, once they decide um, specific company, they hardly change. So once they decide that they want to use Cloudflare service, they don't change, which is really good thing. As a Cloudflare company, um, it can gain profit continuously. So anyway, yeah, this is it for today, and I'll see you guys tomorrow. Okay, tomorrow or the day after tomorrow. I don't know. Okay, I'll see y'all. Bye bye.